Welcome back to the podcast. This episode, we are joined by Mr. Mac Van Wielingen, founder and chair of Viewpoint Group and co-founder of Viewpoint Investment Partners, a global investment management company offering strategies to high net worth families and institutional investors. Mr. Van Wielingen is also a founder and partner of ARC Financial Corp, the largest energy-focused private equity fund in Canada with approximately $6 billion under management, and a founder and former chair of ARC Resources, a leading Canadian energy company. Mr. Van Wielingen has served as chair of the board of Alberta Investment Management Corporation, the board of Institute for Corporate Directors, and is a founding partner of the Creative Destruction Lab, Business Council of Alberta, and Canadian Centre for Advanced Leadership. Among his many awards, Mr. Van Wielingen has been appointed to the Order of Canada, the Calgary Business Hall of Fame, has received the Queen Elizabeth Platinum Jubilee Medal, the Ivy School of Business Alumni Award, and the Fraser Institute Founders Award. Mr. Van Wielingen is also an honors graduate of the Ivy School of Business in Finance and has studied postgraduate economics at Harvard University. Among other things, we discussed family wisdom, the origins of ARC Financial, and navigating investment risk. This podcast episode is powered by ATB Capital Markets. ATB Capital Markets provides financial solutions and strategic advisory services to help businesses thrive. With a track record of successful deal execution, ATB is a full-service investment dealer with a deep understanding and commitment to the industries it serves. Visit atbcapitalmarkets.com for more information. This podcast episode is brought to you by EPAC, the Explorers and Producers Association of Canada. Good afternoon, Mr. Mac Van Wielingen. Thank you very much for doing this. I really appreciate your time.
Okay, no, pleasure to be here.
For the listener, nowadays you are the president of Viewpoint Capital, but maybe before we get into things, what is Viewpoint Capital?
Well, Viewpoint Capital is really a reference to our family office. Our family office is in the business of managing capital, it manages private capital, and we've set up Viewpoint Investment Partners, which manages third-party capital. That's with my son, Rob. And we also have other administrative services, but it's basically a family office.
Well, I know your schedule is very busy, so it's an honor to speak to you today. I really appreciate your time.
Okay.
I thought for the purposes of the conversation, we could structure it more or less chronologically, if that works for you.
Sure.
But to go back to the beginning, how did you get into energy and investing, and why?
Well, I grew up in Calgary. I was born in Calgary. And it's hardly any of us, at least people my age, who were born here. Everybody's from somewhere. And I went to university in Eastern Canada, to the Ivy, what is now called the Ivy Business School. And then afterwards, I came back out west. I lived in Vancouver for a few years, and then came back to Calgary. And it was principally because I had the opportunity to work with my father in the oil and gas industry in his company, which was then called Solpetro. And so I got a grounding in the basics of oil and gas economics. And my academic background was economics and finance. And I also did a year of postgraduate studies in the States focused on economics and political and social theory and all the bigger questions.
What was your dad's company?
Solpetro, it was called.
He had a production company?
Yeah, it was an oil and gas production company.
Huh.
Yeah.
And your parents have an interesting story as well. They originally come from Europe, from tough circumstances.
Yeah, very much so. And it's really had a mark on my family. We're immigrants into Canada. Although I was born in Canada, my brother and sister were born in Indonesia, and my mother was then, her family was in Indonesia, which was then being administered by the Dutch, and her father worked in the Dutch military administration. And my father, his family were German Jewish refugees into the Netherlands in the late 30s, escaping persecution in Germany. And not to spend too much time on this, but it's quite extraordinary that both my parents had life experiences that were some of the worst that can be dished out. I mentioned my mother in Indonesia. The Japanese put all the Dutch into concentration camps, and she was only 14 years of age. She was pulled out of grade 8 and put into a camp with her mother and her younger brother, and then her father and her other 2 brothers went to another camp, and she was there for 3.5 years. And conditions were despicable, and they were incredibly poorly treated. And a lot of the Dutch people never survived those camps. And then on my father's side, the story is more extraordinary. His mother was a survivor of Auschwitz, and his mother's sister was, as hard as it is to believe, she was in hiding with the Anne Frank family. Her sister was married a man by the name of Herman Van Pels, and she was Auguste Van Pels, and they were the Van Pels who were in hiding with the Franks. And so you had one sister who was in Auschwitz, and she was in Block 10, Mengele's unit, and which was one of the worst, and she survived. And then you had another sister who was with Anne Frank, and she, of course, when they were found out, she was murdered in transit to a camp. And so there were incredibly high-profile historic relations involved and historical figures. But the amazing part about it is that we never found out about this until my father was 85 years of age. And that's when a variety of circumstances came together, and he started to talk a little bit, and we put the whole picture together. We hired a researcher in the Netherlands, and we got all the details. But he was very active in the Dutch resistance. But I mention it because I often ask, what did I really learn from my parents? And what I learned was what could be described as a survivor's mindset. My mother was always just put one foot in front of the other. And my father had an amazing resilience and a capacity to bounce back in the face of adversity.
So they left Germany, would have been 1940?
No, they left Germany, and his family left Germany in 1938.
1938?
Yeah.
Via Indonesia?
They left Germany for the Netherlands, and my mother, and at that time they didn't know each other. And my mother's family was already in Indonesia. They had already left the Netherlands.
Where'd they meet?
In the Netherlands, because all the Dutch resistance fighters were put into one battalion and were sent over to Indonesia after the war.
Did they ever explain to you their reasoning on when and how and at what point it was time to leave? They made the conclusion that it was time to get out of Germany, besides the obvious? It must have been a tough decision.
Yeah, no, I never really had that conversation, although I saw their notes. They had left a lot of notes for the family, his mother. But it was classic. It was Nazi persecution of the Jews, and there was a real exodus of Jewish people from Germany into the Netherlands at that point in time.
Oh, it was, okay, we need to go now.
Yeah, that's right.
How come they chose Calgary?
Because of the oil and gas sector. My father had a technical background, an engineering background. He was rebuilding natural gas plants after the war in Indonesia. And he wanted to go to the United States and work in the oil and gas industry. He couldn't get in. And so the two choices were either Canada or Australia. And he got an opportunity offered to him to come to Canada.
Engineer by training?
Yeah.
Did you ever want to be an engineer?
No. To this day, we're not 100% sure if he was an engineer. He called himself an engineer, but he definitely had a technical engineering training. And no, he wanted me to be an engineer, and I never really was very interested in that. I really wanted to go more into finance and economics.
Did you always want to be an entrepreneur?
I was interested in being an entrepreneur. Yeah, I always was. Yeah, and he was an entrepreneur, and that he probably modeled it for me.
But you decided to go to school out east in the beginning? How come you decided to do that?
I did 1 year at the University of Calgary, and then I wanted to go to what I thought might be one of the better business schools or the best business school in Canada, which at the time would have been University of Western Ontario. And I'm sure also there was some motivation just to get out on my own, away from my family.
But you ended up back in Calgary after the degree?
Yeah.
So what did you start out doing? What was your first job?
Well, my first job actually was in Vancouver. Was in talk about asking about entrepreneurship. I started a little precast paving construction business with a friend. And so we did that for a couple of years, and he took over the business. And then I went into a property management firm in Vancouver. And then I decided to move back to Calgary, and I worked as an economic analyst in the oil and gas sector, as I mentioned, with my father's company.
Probably in the 60s, 70s?
That would have, early 70s, mid 70s.
So you came back to Calgary and got a job, and what was your plan at that time? Were you just trying to pay the bills and see where it led?
There was some of that. And Susan, my wife, she came with me from Vancouver. We both just were in the business of creating a life, as a young couple. Started having children. But I always had an incredible amount of ambition. Even at university, I had an incredible amount of ambition. And so I was very prepared to work hard and really be creative and see what I could do.
I read you had a hippie/liberal phase of your life at one point. Do you think that kind of contributed to your open-mindedness and willing to look at things differently and have an open perspective on life later on?
Yeah, I always had a very, very deep curiosity about kind of everything. Everything I was doing, everything I was experiencing, I was very, very curious. And that's the one trait that I think served me well throughout my life, because that really puts you in a position where you can learn and, to be curious. And so I was curious about everything. I wasn't just curious about economics and finance. I was curious about psychology. I was curious about issues of society and politics. And when I did 1 year of grad studies, and I did a lot of work, and I don't talk very much publicly about this. I do write a little bit about it, but in political theory. And I was very interested, for example, in the differences between Marxism and Karl Marx and Adam Smith and these different political economic systems, and which was the best one. And I don't know who that young man was when I think back on it, but I just had this incredible curiosity, and I did have a lot of confidence that I could explore these subjects and not just learn, but make a contribution.
So through the 80s, you were, I guess, working with your dad, but fast forward to 1989, you were the co-founder of ARC Financial.
Right.
For the listener, what is and was ARC Financial?
Yeah, ARC Financial was set up as an investment and advisory company focused on the oil and gas sector. And prior to ARC Financial, the three founders of ARC Financial, we all worked at one of the big national investment dealers, Nesbitt Thompson, which was acquired by the Bank of Montreal. And prior to that, we worked for a smaller brokerage firm called F.H. Deacon Hodson. And I was a securities analyst, and with both my partners as well. And these businesses were getting gobbled up back then. There was a lot of consolidation. And so we just continued to kind of move up the food chain in these larger businesses. And I reached the conclusion I didn't want to work for a big institutional bank. I wanted to do something more entrepreneurial. And so the three of us left and created our own business. And we did it with a partner, and that was Power Financial, which is a subsidiary of Power Corporation out of Montreal. They were very interested in having a platform in the energy sector in Western Canada. We had done a lot of advisory work for them, and so we knew them. And so we created this business. They provided a form of soft capital for us to be able to start the investing side, but primarily we were focused just on advisory, a fee-for-service advisory business to kind of pay the bills.
What would be an example of the advice that you would give? Was it like
Well, we advised, I don't think it's a problem me saying now, so long ago, but we advised Power Corporation on the possible acquisition of Texaco Canada. And that's an example. At one point in time, we were actually involved in about 1 out of every 3 large M&A, merger and acquisition advisory projects on the energy side in Canada for this small firm. And it illustrates, even though we're super small compared to the banks, it illustrates the importance and significance of expertise, having a real depth of specialized knowledge and expertise, because that's what we brought forward. That was our competitive strategy.
What led to the conclusion that there was an opportunity in the market? How come you thought there was opportunity?
What happened was, what really caught our attention was ultimately, which led to a private equity business, which ARC Financial is now, was the number of investment firms and sophisticated professional investors who were coming in from the U.S., from New York and Europe, who would contact us. They'd hear about us. They'd contact us because they wanted to ask what our views were on possible investment opportunities. And as I mentioned, some of them were private equity. And so they're large private equity pools of private capital looking for investment opportunities in oil and gas in Canada. And the obvious dawned on us, and that is, well, there's no one really set up in Canada as Canadians on the ground, boots on the ground, doing this in the same way. And so why don't we go into the private equity business or into the investment business? And so that really was those were some of the initial catalysts. It was really an entrepreneurial vision that there was an opportunity and we had the expertise and we could do it.
Your value prop to investors was that you had a specialized knowledge in the energy sector, and as a result, you would have superior returns eventually?
That was it in a nutshell, yep. I remember we didn't have any stationery and we didn't have any pens and pencils. We had to create an account at a stationery store, but they didn't want to give us credit. And we made the strategic decision to build the organization before we actually had revenue. And so it had to be capitalized. We had to have enough capital invested so that we could hire people and give them enough assurance that we were going to be around longer term. And that was quite harrowing the first year, because we had analysts, we had administrative staff, we were geared up, we had big ambitions, but we didn't have a lot of revenue to pay the bills.
Do you remember where the first office was?
Yeah, I do. I can't remember the name of the building, but it's just right across, it was the Bow Valley complex, actually.
ARC Financial, where did the name come from?
Well, our name originally was Power West. And in partnership with Power Financial, they agreed that we could use their name to set up this new business. And they were attracted, as I mentioned, to having a Western Canadian platform. And so we called ourselves Power West Financial. But then what happened was that we were in an umbrella, a set of companies that included all their venture capital investment businesses. And then Power Financial decided they wanted to get out of that business. They basically sold everything except us. And we made a proposal to them to buy out their ownership in our business. And as part of that process, we had to remove the name Power from our name. And so we chose ARC because it stood for Advisory, Research, and Capital. That was the origin of the name.
Do you remember when you realized ARC Financial was doing well and that your idea was working and you didn't have to worry as much anymore, maybe in the mid-90s, sort of?
Yeah, it was a long time coming before I felt I didn't have to worry. And in fact, the last few years I've been a little bit worried, but I'd say probably it was 5 years in. We realized that we were getting some traction. We were generating income. We had a very active business, a very demanding business. The advisory business is incredibly demanding, and the investment business was paying off. And so 5 years in, maybe even 10 years in, it started to look pretty solid.
And on the flip side, did you have a plan B if it didn't work out?
We didn't. I didn't have a plan B, but in a sense, I would say that the mindset of a plan B was in place, and that is within the business itself. And ARC Financial and ARC Resources, which was in ARC Financial eventually, but at ARC Financial, we pursued a strategy that was somewhat opportunistic and diversified. An example is ARC Resources. We decided to use our expertise in Power Corporation's capital to buy production. So we were in the advisory business, and then we got into the production, acquisition, and management business. And that grew, and it was very successful, and Power Corporation was happy with it as an investor. And that was at the time that royalty trusts were being developed. And so we spun it into a royalty trust, which became ARC Resources. Royalty trusts were shut down, and ARC Resources was a corporate. And it's been hugely successful. And then we also had a research business, which we sold, and we integrated all our research resources into our investment business. We actually had believe it or not, a little mutual fund that we created. It's called ARC Strategic. And that was another example of diversification, trying to use our expertise to develop a base to pursue different kinds of opportunities. And it was very successful, but we realized that it created a lot of conflicts with our advisory business. And it had a profile which had created risk for us that was much larger than the financial gain, in a sense, in that business. So we wound it up enjoying very good returns, and all our investors enjoyed good returns along the way. And so there was a number of different things we were doing. And the M&A business that we had was also incredibly successful, and we decided to wind that up as well and put all that capability into private equity. And that was a big strategic decision for us, just to concentrate on private equity, and then with the production business spun out. So I had a mindset certainly, that the way to reduce the risk of failure, the plan B thing, was to have a suite of opportunities, to keep creating opportunities, and then ultimately to be able to determine which opportunity should we really concentrate on. Although as we were developing opportunities, I wasn't thinking that there was an end game, that I somehow knew which business would be the most successful. It evolved.
This podcast episode is sponsored by Conate Water Solutions. Do you need cost-effective water sourcing options to supply your next drilling or completions program? Conate Water Solutions is a specialized hydrogeology company focused on water well drilling, testing, and water management services in Western Canada and Texas. Contact info@conatewater.com or check out conatewater.com for more details. This podcast episode is brought to you by JSG Professional Services, Canada's trusted leader in pipeline construction management and inspection resources. JSG provides competent, qualified, and verified pipeline construction management and inspection resources, supporting Canada's largest pipeline companies from initial development through final execution. Whether your project involves new pipeline construction, integrity programs, maintenance, pump stations, compressor stations, or inline inspections, JSG has consistently delivered experienced professionals to Canada's energy industry. JSG proudly supports Canada's energy infrastructure with competent, qualified, and verified pipeline construction management and inspection resources. Visit jsginc.com for more information. In the early to mid 90s, there would have been First Energy started, Peters was going, then you had Tri-Stone, and then you guys. So was there enough business to go around, or what made you different than the other M&A advisory?
Yeah. Well, we were competing on expertise and relationships, quality relationships, trust. Our advisory clients, they really had to trust us, and that was a critical factor. And those businesses also, like Tri-Stone or First Energy, were in the underwriting business. We weren't in the underwriting business. And so there were sort of structural differences between us. But I do remember having lunch with Brett Wilson, and I know you've interviewed Brett, over at the Petroleum Club, somewhere along in this evolution, and saying to him, listen, I got news for you. We're withdrawing from the advisory business because we were major competitors. And he jumped up onto his feet, in his inimitable style, and shook my hand and said, that's just fantastic. That's the best news I've heard in a long time. So we withdrew as a competitor, and yet we had been very successful. And so it was really very much a dynamic evolution of entrepreneurial thinking.
Yeah, Brett Wilson was very generous with his time on this podcast, so he's a big supporter. Do you remember your first big client you landed in advisory?
Yes. Canada Northwest Energy was probably the largest high-profile client initially, and we ultimately advised them on the sale of themselves to Sherritt Gordon. And that took a lot of time. That was a lot of work, very complicated, and a lot of international assets, which again I think part of the reason they were attracted to us, because we had that real specialized expertise.
So your pitch to outside investors at that point was higher than market returns on the energy sector. How did you promote the fund, especially in the beginning?
Well, I mean, the pitch, in a sense, of ourselves was there is no investment manager that has the breadth and the depth of experience that we have, including the advisory side. You know, the advisory side gave us unique insights and very, very strong understandings of financial structure and financial restructuring and on the transaction side. And then we had a research capability. Kevin Brown was then heading up research, and then Peter Terzakian came in to head up research. And Phil Swift he was one of the founders, and he was heading up research. I have a research background. And so we were able to really convince investors, large institutional investors, primarily in the States, that we had this unique breadth of experience that could be brought into private equity at a point in time when the industry was well positioned. The industry in Canada was well positioned to do very well. And it was. And our first few funds were incredibly successful. But a lot of that is timing and the luck of timing, getting the cycles right. But it was kind of the confluence of all of that.
If you were to break down the business into, say, a widget, where in the case of ARC Financial, your widget was capital, did you have a expected annualized return on your widget of capital every year? How did you think about it that way?
We hadn't advertised expected return that when we were marketing. We were always gunning for 20% annualized returns, so very high, recognizing that we wouldn't necessarily be there, but we wanted to create a very high threshold for ourselves and to make sure that we didn't inadvertently fall into kind of accepting mediocre returns. And which was, I think, a very positive thing, because it really helped create a culture of performance. But having said that, in the investment business, you're very much, your returns are hugely influenced by broad macro and market fundamentals. And so, we got hurt just like everybody else did through some of the bad cycles. I mean, we would always kind of console ourselves that we were doing better than the market. But nevertheless, our absolute returns sunk significantly for a number of years, and our funds underperformed our investment targets.
Best deal you ever saw? Do you remember one that sticks out other than ARC Resources, maybe?
Well, we've had a number of incredible successes. Like, we were very large investors with Mike Rose in almost everything he's done. We were also very large investors with Pat Carlson in almost everything he's done. I mean, those two guys, we should have statues of them in our lobby. They drove our returns. And another venture that is lower profile in a way, it was Western Oil Sands. And I was very involved in that. And I was on the board there for 8 years. And that was hugely successful for us. And so those would be some of the big scores that we had. But it's a funny question, the best deals I ever saw, because you don't know until after the fact.
Mm-hmm.
So sometimes you see these deals and you think they're the best you've ever seen, but time will tell.
Amber Energy, did you get in on that one?
We did invest in Amber, yeah.
Being in the business of capital, did you ever think to yourself at times, maybe especially the lead up to the '08 financial crisis, that we needed to slow down and make sure that maybe capital was flowing too fast? How did you think about that?
Yeah. Well, actually, quite frankly, when it was flowing fast, we were just enjoying it. And after the fact, we realized that it was flowing too fast, and it caused us to, in a sense, invest, to compromise perhaps some of our strategies and our standards, our performance standards. And I mean, we worked hard to continue to apply our disciplines, like through the financial market collapse, for example. Now, in that collapse, we pulled back, of course, and became extremely selective. And ARC Resources was in the market, upstanding, and we were the first public oil and gas company to actually go out and raise capital in the public market in the middle of that crisis. It was a very, very significant decision for ARC Resources board to do that, and I was chair at the time. But we couldn't tolerate the risk, and if financial markets remained shut down, and so we basically got positioned and just waited for an opening with our underwriter, and as soon as it happened, we just went for it and raised capital and just made sure our balance sheet was bulletproof. And I mention that because that's part of our mindset, and certainly as part of my mindset. And I referenced at the beginning my parents and all the risks they faced and the crises they faced. And so I always had a mindset to manage what I think of as strategic risk, the most material risks. You really have to make sure that you do what you can do to avoid and minimize those risks. And those are the risks that can take down your business. And 08, 09 was that time for a lot of companies. There was just no liquidity. I mean, at that time, I was on AIMCo's board, the Alberta Investment Management Corporation, and I remember getting a phone call from our CEO, and AIMCo was one of the largest bondholders in North America of corporate bonds, and he said, I have to tell you this as a director, but the bond market's gone no bid, and we need liquidity. We're running all these pension funds. And so they became a little bit of a microcosm of what was going on globally for me, in terms of my understandings. And that is we were forced to sell high quality blue chip equities in order to create the liquidity to meet our financial obligations. And that just magnified the downturn in markets when you're doing that. And it also was a real lesson that you don't want to get into a position where you're forced to sell your highest quality assets because of liquidity needs. But all of that is a little bit just to create a context in terms of you understanding me or your listeners understanding me, that you really want to structure your affairs so that the inevitability of the unexpected, that you're protected from it. And right now, Canada is facing a lot of those issues. I mean, a lot of people never would have dreamt the unexpected that has now happened, and that is that our long-standing ally would turn against us. And the same thing in Europe with Germany and Russia. Germany became incredibly dependent on Russia for energy supplies, and they turned a blind eye to strategic risk. Canada, in a sense, turned a blind eye to strategic risk. And this is why in portfolio management, portfolio managers will create a structure to manage risk. And the classic is the 60-40 equity debt. And they don't move from it. They don't allow themselves to get pushed one way or the other, because they know at the end of the day, the unexpected can happen. Markets can melt down. All sorts of different kinds of adverse circumstances can develop. And you need to have a structured program to manage risk. Just to be 100% clear, we're not 60-40 portfolio managers. We manage risk differently. But the point I'm making is about risk management, strategic risk management, whether it's corporate or as an investor.
Speaking of risk, do you remember the Halloween massacre,
Yeah.
October 31st, 2005?
Mm-hmm.
What were you doing that day?
Well, I don't remember what I was doing, but I just remember feeling shocked, because Stephen Harper's government had said they would never touch it. They would never overturn or change the rules for the royalty trusts. And there was such a commitment out west in particular to use that structure. And so it was a real shock for us, to have to deal with that. And, when I look back on it, I think it was a good thing. And we had the right assets and the right management team that we could adapt to it and become an operating corporation.
It was a shock. Black swan.
It was a black swan. And now we've had a number of those. I mean, this whole discussion that you and I are having here today could be around risk and the unexpected. And you're asking about when we started up in the first year of our operation. The end of the first year of our operations as Power West, in our first investment that we made, which was a low-risk natural gas investment, a gas plant, I got a phone call, and it was Christmas Eve day, and the temperatures had fallen to like 40 below. And nothing was working in the field, and we had a leak, and there was a propane leak, which at those temperatures would go from liquid to gas, and there was an explosion in the plant, and 2 men were killed. This is in our first year of operations. We had an operator who was running that plant. We didn't even know if he had insurance in place. I really thought that our business was finished, literally in the first year, that we weren't going to be able to survive that incident. And we can look every year, every few years. Now, that incident I just described, I can do right now. I can talk about it kind of dispassionately. But it took me many years to be able to talk about it because it was so disturbing, what happened, the human side of that. But we can look at it from a business point of view. We can look at every few years we had one of those, what you just called a black swan event in some way. And even recently it would have been COVID. Now it's the tariffs. I mean, whatever it has been. And then of course there was the decarbonization climate phenomenon, and an environmental minister in Canada who's been arrested 4 times for activism. And he was our environmental minister. And when Bill C-69 was introduced, which became the Impact Assessment Act, it was structured so that the person in that position would have sole decision-making authority for approving any project. I mean, there was so many things that created uncertainty and kind of potential catastrophe for our firm that, we were just continually having to manage our way through those circumstances.
Did you get better at taking advantages of the crisis, and you can see it, the opportunity?
Yeah,
maybe?
I think that's fair to say. Yeah, you can sort of see it ahead. Yeah.
So in 1996, you started ARC Resources. I guess the question is, why did you start ARC Resources?
Well, I mentioned that we had deep research in the sector, and my background was research at one point in time. And we were convinced that the industry on a going concern basis was actually confiscating value for its shareholders. It was a lot of capital was being plowed in, and it wasn't profitable. And we thought another model where you could generate higher returns for your investors was simply to distribute the cash flow. Not all of it, but a large part of the cash flow, so that your investors would get a return while they wait for a longer-term capital return. And we had modeled it. We had analyzed it. I was convinced of it, that it was a good model, and that was the royalty trust model. And so that's what we did. I mean, and also at the same time, there was a lot of assets were coming in the market for purchase that the majors in Canada kind of didn't want anymore. They viewed them as too small and non-strategic. And so we said, well, let's make a business of that. Buy those assets and put them into the right structure and pay out that cash and generate high returns.
You remember when you first learned of the trust model, maybe through Marcel Tremblay and John Brusa?
Yeah, it was through those guys. And John Brusa was actually an advisor of ours. And Jim Kinnear also at Pembroke.
And you thought to yourself this would work for a new E&P company, long story short. And you bought production, or did you start out drilling wells?
No, we bought production. And we hired just a top reservoir engineer, business leader, John Dealworth. And, he was really the frontline guy who built that business.
It was going along pretty well until like we mentioned, the trust change.
Yeah.
So you pivoted to a normal corporation.
Yeah, it's that resilience adaptation thing. I mean, a lot of this conversation could be under that theme of resilience and adaptation, which is critical for the entrepreneurs and the entrepreneurial mindset.
Do you remember the first well you drilled?
Oh boy, I remember our senior operations guy talking about it. And I remember him being very proud that we just drilled our first well. I don't remember where it is. I think it was in the Pembina field.
Okay.
Drayton Valley. Do you know?
I don't know.
I think it was in the Pembina field and into a Cardium well, which we became very active in that whole area. And then we developed, and it was the first well he ever drilled, actually. And then we developed an operating capability around that individual, and his name was Myron Stadnick. And then we hired, and he had originally been at Shell, and we had another fellow by the name of Doug Bonner, who was a reservoir engineer, also from Shell. And then ARC Financial, one person who was very involved at that time in ARC Resources as well was Nancy Lever, also reservoir specialist. She also was from Shell. And so we had, this group of really experienced, smart people to help us build that business.
It's rare for an E&P company to last so long and also do as well as ARC has done. What do you think has led to the company's success?
One of the things we said to our investors when we started was, our objective is to generate superior long-term returns. And we believe we can generate returns that are higher than a full cycle, your ordinary full cycle operating oil and gas companies, but it's long-term. And so we sort of beat that into our investors and into the market, and into our employees and the management team and the board of directors. We need to be strategic. We need to be long-term. And, and a lot of that, again, came from the research side, the understanding that you can't be strategic unless you are long-term. Or another way of looking at it is, if you are long-term, then you will become strategic. And so, I was, and Phil Swift and I were public market securities analysts, and we saw the folly of short-termism in running businesses. And so I was always intrigued with the possibility that you actually create competitive advantage if you can be long-term. And the key, though, is you got to get your board of directors on side. Everybody has to buy into it, because there's so much pressure that can come from the board for next quarter's results.
This podcast episode is powered by Broadbill Energy, the local midstream company that puts producers first. Broadbill Energy does things differently and doesn't just move energy. They are moving the industry forward. While others take a cut, Broadbill shares profits back with their customers, because when Broadbill customers win, so does Broadbill. With a producer-focused approach, Broadbill specializes in the gathering, processing, and transportation of oil and gas, ensuring safety, reliability, and maximum value for the people who actually produce the energy. If you're tired of the same old midstream model and want a partner that works for you, it's time to talk to Broadbill. Visit broadbillenergy.com to learn more. This episode is brought to you by Astro Oilfield Rentals. Planning your next drilling or completion site, or budgeting for an upcoming construction project? Astro has your remote communications and accommodations needs covered. With over 25 years of experience serving Western Canada, Astro continues to expand, innovate, and deliver the best value for your investment. Astro offers a full range of communication solutions, including cell towers, radios, and internet services. Astro's lineup features well site trailers, sleepers, full gym units, medic centers, and custom-built command centers, helping you stay connected and comfortable in even the most remote locations. Visit astrorentals.ca for virtual tours and more information. Did you guys get a sense that the window was open at the time in 96 to start ARC Resources, that you really had to take advantage of it now?
Yeah, I didn't think of it as opening and closing, but I definitely saw the opportunity.
You could sense it or see it.
Yeah, but that's the nature of opportunity. The definition of an opportunity is, there is a timing element. It exists in a point of time, and it changes and it evolves. And then once you're established, though, the opportunities just start to look different, and they change. Like one very interesting part to ARC Resources story was what they did in the area in Northeast BC called Atachi, which when we bought that asset, just undeveloped land, people were giving us the gears that it was moose pasture. And it wouldn't we didn't know what the full potential was, although we had scoped out the potential and we were excited about it. But a lot of public market players were quite critical that we dedicated shareholder resources to a long-term asset like that. But we did it to create optionality. Strategic optionality was an expression we often used, so that as we moved into the future, there could be an asset there that could be extraordinary. And that's the way we were thinking. And we had to have a board of directors who get that form of thinking. And that now is just a fantastic resource. I mean, it really is arguably a large part of ARC Resources' future.
You're selecting people to work on your assets or your board of directors or people in general. Have you learned has it gotten easier to find traits that you're looking for, or what do you look for in business partners? And
I think when I started out, I had the right instincts. And the only difference between then and now is I can articulate it. I then couldn't articulate it as well. But now I know what I was then looking for.
Yeah.
And the one trait, and I referenced this earlier as well, is curiosity. And I always said to my partners, I'm not going to hire somebody who isn't curious. And curiosity will show up differently in different people too. It's sometimes it's quieter, sometimes it's brighter. I always tease Peter Terzakian when I interviewed Peter to bring him in. And I remember when he was sitting in the boardroom, I remember thinking I could turn the lights off and in the dark and he would still light up the room. He was effervescent, hugely curious, intellectual. And, so I look for that. I look for that aliveness, within somebody. And, but it shows up very differently in different people. And so there's this kind of a discernment there that is needed. I also look for integrity and, somebody who I know I will enjoy spending time with because I can get to know them. There's enough transparency that you can see who they are and they're prepared to be vulnerable as who they are. And that can create a bond and that can create a very high level of trust, and you can work together and you can create real teamwork with people like that. Those were a few of the qualities that not just that I looked for, but that we drew out in our culture and articulated it within our culture. And we're very purposeful in developing it and recognizing it in our culture. Now, how all of that has evolved in the two ARC Financial and ARC Resources is another kind of discussion, because I'm not as engaged anymore. I mean, ARC Resources, I'm not engaged at all anymore. Mm-hmm. And ARC Financial, it's just a lot less.
In terms of sharpening and developing your capital allocation skills, where did you learn the most? Did you just read a lot, or how did you develop that skill set?
Yeah, and it sort of gets back to the risk discussion we were having, and understanding that, when people talk about risk-return relationships, that the returns are very often quantifiable, but the risks aren't. And so to understand the risks requires a lot more intuition and maybe imagination in a way. And I enjoyed the returns. I did not enjoy I was very prepared to take risk, but I always wanted it to be very carefully structured and thought through. And we needed to be deliberate as to what risks we were taking. And those are some of the principles. And the driving mantra, though, for us at ARC Resources was capital efficiency. We had to deploy our capital efficiently. And the structure that we had where we were paying out a lot of cash was supportive of that because we didn't become overly capitalized in a sense. In our projects, we were always having to screen out our best projects with the highest return, lowest risk projects. And that was part of the discipline. But it's a mindset. I mean, the whole capital allocation and the right capital allocation, and also I would say capital structure. Those are the really big drivers. Those are the determinants of business success.
You're a good investor. Did you have an investing style or somebody you looked to through the years, like a value style, or how did you think about it that way? Did you look to somebody like a Warren Buffett?
Not really. I paid a lot of attention to my fear and my discomfort. And if we were making investment decisions and I was uncomfortable, I wouldn't drive past that. I would look at it, I'd explore it, I'd tell people I was uncomfortable, and I'd ask them to help me with my discomfort.
Mm-hmm.
Why am I uncomfortable? And we would sort of get into it in more detail and more depth. Then we'd say, well, what can we do to reduce that discomfort or the fear of the risk? Or should we reduce the size of the investment? Should we bring in a partner? What do we have to change? I mean, so it was a mindset more than anything else. I mean, if there was one group that did influence me, it was Power Corporation. Desmarais. They influenced me. They were incredibly ponderous strategically and analytically. They didn't rush into decisions, and I don't know the way they operate now, but back then, and it kind of gave me permission to be that way. I was inclined to be that way, but they did influence me.
Did you meet the senior, Paul?
Paul Senior, yeah, Paul Desmarais the first, yeah.
That's interesting. Some current events? Maybe a couple of those questions? Is that all right?
Sure, yeah.
Fast forward to today. Philanthropy has been a big part of your life. You supported numerous causes through the years and been a major capital provider. How come philanthropy has become important to you?
Yeah, I just really believe in supporting our community in whatever ways we can. And I was interested in bringing that entrepreneurial mindset into philanthropy and really looking for high impact opportunities and making our community stronger and helping those who are more vulnerable. But it wasn't just about the vulnerability side in the community. It was also about creating structures and processes that perhaps didn't exist to the extent that they could. Now, an example of that was in 2008-09. You asked about the global financial crisis back then. Our response to it was to create the Canadian Centre for Advanced Leadership at Haskayne. We were so appalled by, you could say, the poor decision-making, or you could say the weak ethics of the major investment banks in the United States. And they took on way too much leverage. They really were short-term driven. And bringing in low-quality assets and piling on debt and becoming very short-term and forgetting why they existed, that they were there to serve their clients. Their clients should be first. And they became totally preoccupied with their own income levels and bonus levels and all that greed. And, and human beings can fall into that. But so we created this leadership center as an effort to try to do something to contribute in whatever small way to create and offer more effectiveness and ethics into leadership, business leadership in Canada.
Is there a particular cause you're working on or initiative?
That was a cause. Ethical leadership was a cause. We also done, my wife's very interested in a more cultural side. We've been big supporters of the National Music Centre. Originally, we were really involved and big supporters of the United Way. A host of other charitable organizations in largely in Calgary. And some of them were high impact. And so we developed this family foundation, and our kids are involved in it, and we're allocating capital into the community.
Politics? Do you want to do one or two politics, or?
Sure.
Hopefully things are changing federally in Canada soon, but do you think that will be enough to shift the tide for Canadian energy, or what needs to change?
Well, my greatest fear is that things level out and we go back to the way we were in Canada, and that we don't learn from what has transpired here. And we don't learn from how vulnerable we were, because those vulnerabilities existed before Donald Trump was president. And there's such a tendency for people wanting to just blame because it's simple. And if you're blaming, you kind of don't have to look at yourself. And so that is one of the big fears I have is that Canada's our levels of productivity have been steadily declining for roughly 10 years. And that's reflected in our dollar, and our competitiveness was declining. So I worry that we're not necessarily going to learn, and we will go back to where we were before. We were on the economic side, we're laggards in terms of our meeting our international defense commitments. We were laggards. We have all these trade barriers with ourselves. We're very, very good at fighting among ourselves. And Canada really has been underperforming. And I've been going back and forth to Ottawa for about 10 years now. And it's, to speak very bluntly, I felt like, a lot of the people I was talking to, the people at the top of the bureaucracy of the government, they understood it and they got it. But at the political level, they didn't. And it was like they were impervious. And I have some of the most amazing discussions with people that were shocking to me. I was pleading for more leadership and more vision, but it was a very, very narrow view of priorities for Canadians. And it was the whole climate thing, which is fine. And I was comfortable with decarbonization, but the implementation of it was so narrow, and we were turning a blind eye to the most productive value creating sector of our economy, and with all the consequences that we have seen. So now we're into this pre-election period here, and I can see the tugs and pulls that are worrisome, that the central Canadian center-left mindset may very well reassert itself, and we just get right back on that old track. And I find that a frightening prospect if we don't have a government that is really committed to change and changing the way we've been operating. Now, I think they will, but there's a very strong ideological side to all of that is not necessarily serving Canadians, and it's serving the leaders, the political leaders, but not necessarily all Canadians. And that's one of the big lessons I think we've got to come to understand. And that's why the whole push towards populism has been so powerful, because most people feel like they've been neglected and their interest didn't matter. And certainly if you go into rural areas in Canada, it was like their interest just didn't matter.
Retirement is based on the assumption that you didn't really like your career, but you are still working. Did you view your career as something you enjoyed all along and that you didn't really need to retire from?
Yeah, I never thought about retirement. But in recent years I've started to use the word. That's an accomplishment for me. I'll tell people I'm retired. And yeah, no, I found that my career I felt so engaged and active and involved and fulfilled throughout my career. And so proud of the relationships I had, with so many people and my partners, and now on the investment management side here with Viewpoint Investment Partners, my son and all his partners. It's just a very, very deeply satisfying trip I've had. And retirement is ultimately what happens as you get older is you find you have less energy, unless you're Jim Gray.
Yep. Shout out to Jim Gray.
Shout out to Jim Gray. And he was a great friend of my father's. And so I think, I can see that I'm kind of recalibrating all my priorities and my time commitments and looking at everything differently. And I'd like to think that I've become a little bit wiser and much closer to my family members in some ways, even though I always felt I was. And so life still feels very rich.
Advice to a 30-year-old Mac Van Willigen. What would you tell him?
What I would say is stay really close to your own experiences. Don't turn away from your own experiences because they're uncomfortable. Turn towards them and explore, inquire into them. And even if they seem kind of impossible or futile, I'd say just stay with your own experiences, continue to explore them, talk to people about what you think is going on, talk to people about their experiences like you're doing here with so many people in our community, and really just stay on track with your own deeper sense of who you are, because that's where the connection is. The alternative to that is you turn away from hardship and adversity and discomfort, and you can become quite neurotic and become totally wrapped up in image and ego. And I think you suffer.
Well, unless there's anything else you want to add, we can...
No, it was great. Thank you. Thank you for doing this.
And the conversation there. Thank you. I really appreciate your time.
Okay, for sure.
Hello, listeners out there. Thanks for checking out the podcast. Hopefully the episode provided some insights. If you enjoyed the show, check out trose.ca where more episodes are yet to come. You can also subscribe to the podcast where your token of support is much appreciated. Until next time, happy coffee drinking.